2019 is shaping up to be a very wild year. This has been non-stop with the China-US trade issues, the global central bank fear, and the general economic malaise. There have been numerous indicators showing the weakness, which has shown up just about everywhere, and right now, the entire world is waiting for the Fed to drop interest rates. Of course, historically, by the time they began to lower interest rates, it was already far too late. You came here for the truth, so let me unveil that for you. Today we're going to cover some more information related to the China and US issues that have been going on. I also want to touch on what's happening with the financial system in China. A lot to cover, and I want to make it as quick as I possibly can. This is an article written by Ray Dalio on his LinkedIn account, and is talking about the China-US trade issues, and he makes a point that I have talked about numerous times before. It's in this paragraph here. What's happening between the US and China is an ideological conflict of comparable powers, those are his words, in a small world. It's about 1. China emerging to challenge the power of the US in many areas, and 2. These two countries having two different approaches to life, one that's top up and one that's bottom up. These conflicts extend to American and Chinese businesses, technologies, capital markets, influences, and so on. They are made especially difficult because the Chinese, the Americans, and those that deal with them both are now so interdependent, with the interdependencies being both vulnerabilities of each, and they can also use it against each other. Now this tells us what has been happening over the years. Obviously, China has grown substantially. We have seen their rise, and obviously nobody doubts that. But what has happened along the way is that both sides of this equation need each other to some degree. You can argue one needs it more than the other, but at this time, obviously, you have China, which has been buying up so much of the US debt. They've been buying things like soybeans, for example, agriculture. They've been buying businesses and real estate and land and infrastructure, and then it works the other way around because the United States has used China as its machine, as its factory, as its offshoring location to be able to run their businesses the way that they have. Both sides have been benefiting from this relationship here when you look at it on an economic sense. That's the only way I'm looking at that. Here, though, we have an issue because China is trying to come up and the US is obviously seeing it as a threat. So this is going on, and it probably will not stop even if we get a trade deal anytime soon. So I think that there is much more to this than simply signing a piece of paper. China, the world's largest soybean buyer, has put purchases of American supplies on hold after the trade issues between Washington and Beijing escalated. State grain buyers haven't received any further orders to continue with the so-called goodwill buying and don't expect that will happen given the lack of agreement in the trade negotiations. So we've had something that has been going on for a while between these two, that China was buying up quite a bit of the US soybeans. This is important for the farmers in the United States, as well as China being able to access that. It looks good on both of them because they're partners, they are doing trade and so on. But now, as of this point, they've stopped that. This is the chart that is associated with this Bloomberg article. Dashed hopes American soy sales to China have been recovering. And you saw that as we look back into late last year. Basically, there was nothing being imported whatsoever. And then that changed. And you could see month after month as the talks started to go well. We saw this information coming out in the news. They were going to import so much from the United States. They had an agreement all set in stone, and then that didn't go so well. Right now, you can see the PBOC injecting cash into the system. They have to do this right now. It is very important because of the failures that have been seen. I'm going to show you some interesting information today that really isn't understood by the majority of the financial analysts. Rattled China investors worry what's next. Rattled China investors worry what's next after bank seizure. So I covered this in a previous video talking about Baoshang Bank, and essentially what we have here is this the start of a new era for China's $42 trillion financial industry, or a one-time shock that will quickly be forgotten. 5 days after the first government seizure of a Chinese bank in 20 years, investors are still grasping for answers. They don't know what's happening here, but China is responding by injecting capital into the system because they know what could come. So they're trying to keep it liquid because liquidity is the most important factor when we look at the financial system. Flunking financials. Over 10% of Chinese banks were deemed extremely risky in a PBOC test. So you're looking here, all of these, basically the rating goes from 1 to 10. And I just wanted to show you, yes, in fact, there have been, the majority of them are supposedly safe and secure. We know that that isn't true. However, there are many here that we can see that are in fact risky, high risk, even according to the PBOC. So you know that when you look at it deeper, this risk is actually much worse than what they're ever willing to admit. Last but not least, if we can't challenge China, no one can, warns operator of the only US mine for rare earth metals. I did a video about this previously, talking about the challenges that could be faced in the near future. If we can't be economic, there's no hope for the US industry. That's according to the co-chairman of this company. They estimated that Mountain Pass should be self-sufficient from China by next year and produce its own separated rare earth products. But in the meantime, the mine is seeking help from the US government, but we're not counting on it. So what happens is, even when the stuff is produced in the United States, it still gets refined and processed in China. So that is part of the difficulty that a lot of people simply don't understand. They all say, well, don't worry because we have it in our country, we don't need to worry about this. But that isn't the case. If you just look into the information, you will definitely see what it comes down to. That's all for this video. If you found it informative, please give me a thumbs up. When you give me a like on this video, you are supporting me and this channel, so I do appreciate that. If you want the financial education you were not taught in school, these two books have everything you need from top to bottom, A to Z. You can get the foundation, history, the asset classes, everything you need. Click on the link in the description if you want the audiobook. That's available at themoneygps.com. If you want to know some more details, I cover it all in this video, so click on it and I will see you there.